Good morning, I'm Tim Carter, Client Portfolio Manager on npower's Optimisation Desk. Welcome to this morning's market update on Wednesday the 20th of January. So looking at UK energy prices today, they're again down on last night's close. Key drivers are, number one, oil markets having rallied yesterday are powering gains and are back down to $28 per barrel. Number two, the UK gas system is again oversupplied despite the highest demand levels of the winter and ongoing outages in Norway. And finally, number three, we've seen Northeast Asian spot LNG prices plummet today, as well as Japanese stocks as well, which is pressuring the global outlook on gas prices. Those are your key headlines. If you'd like any more information, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So, looking at the UK gas system to start with, then in a bit more detail. As I said, we've got highest demand levels of the winter so far, with around 285 MCM. This is obviously pressuring the system, but we've still got oversupply as storage sites continue to pump out at around their maximum capacities. And we've also got Langeled pumping near its capacity at 70 MCM, so those are the flows from Norway. And as I said, that comes despite an ongoing outage, which seems to be impacting more on the flows towards the continent rather than to the UK. Elsewhere, we've got LNG sending out just over 30 MCM. And we've actually got reduced imports from Holland by around 5 MCM compared to yesterday. And actually we've also got 10 MCM of export demand going out to the continent as well. But despite this, line pack forecasts are still for around 5 MCM of oversupply today. In terms of temperatures, today is probably the peak in terms of the demand and the trough in terms of temperatures, with temperatures picking up into the weekend, and by early next week they should be around 6 degrees above where we are today, and that will shave off around 80 MCM of demand. Moving on then to look at the oil markets. As I said, there was a bit of a rally yesterday with prices picking up above $30 per barrel, but those gains have been powered today, and we're back below $28 per barrel today, as expectations of US crude inventories are that they will grow, or will have grown last week, I should say. Bloomberg survey suggests that would be around 2.5 million barrels, but because of the bank holiday in the States on Monday, we're only expecting API data today and then the official EIA data tomorrow. Finally then, looking at those Northeast Asian spot LNG prices, as I say, they've gone down to record lows since the records began in 2010. Which is narrowing the spread to European prices. Therefore, we'd probably expect more LNG cargoes to head towards the UK over the coming months. This has primarily been driven by an increased expectation of supply coming from Australia, which will really ramp up in the next few months, along with, as I said, the stock market, not a crash, but downside, with Japanese stocks around 3.5% down today. Those are your main headlines and key information. If you'd like any more info, contact us on the desk. Otherwise, have a great day.